It's time now for the big three. We've got 3 stocks, 3 charts, 3 trades. Rick Ducat, of course, joining us to take us through the charts. And here to take us through the trades today, Charles Moon, stock strategist at Prosper Trading Academy. Great to have you both with us this morning. Charles, I'd love to get your thoughts on the market action we're seeing on the heels of Nvidia's report. You know, a lot of green still across the board this morning.
Yeah, and you could see a lot really dependent on how Nvidia is going to report. The AI growth story has been unraveling over the last few weeks. Stocks with the stocks that are tied to, AI, either development, data center, energy. They've all just are so far off their highs on these deep retracements. And so, this was causing a concern of valuation. Well, Nvidia kind of eased those concerns with a very strong earnings report and says that the growth story is still in the picture, and a lot of these stocks are responsively up. So, this was one of the first, I would say, easing of concerns in the markets. Now, we're still in a risk-off kind of trend to the downside here. The overall markets are still struggling for gains. There's been some outliers. Google's been one of them that has been really, really strong as of late. But this is really going to be dependent on how Nvidia's performance is going to be over the next week or so coming off this earnings report.
All right, so let's move to your first pick today. They are definitely one of the stocks we've seen pull back recently. I think just in the last month, down 18.5%. We're talking about Oracle here. Walk us through this one.
Yeah, so Oracle, it's struggled for gains after that extremely robust earnings report. They've been working lower. They actually came down and filled the gap, which was the closing price of the day before their earnings, and it traded lower below that level. So, it's not as if the market doesn't quite believe what their future revenue and booking revenue is going to be, but the market does have some doubt if it's going to be truly achievable because of the power aspect. But it looks like now Wall Street's starting to step in near this 200-day moving average. So today I was actually looking to see how it was going to trade around a very critical price, which is this 230 level. They found no buyers. The buyers that did come in got absolutely run over. So now I'm pivoting down towards this 210 level, which is right near this 200-day moving average. This seems to be kind of the threshold, the line in the sand that Wall Street's starting to put down. And if they could stay above this level, I like the reversion right back to around 225, 230. Ultimately, though, I do think this stock will get some legs if this market does rally towards the end of the year. Historically, we do have that Santa Claus rally in the picture, even after a very, very big up year like we've had this year. So if we get towards that 245, then the price action there is going to be really interesting, because that's kind of that threshold where I'm expecting Oracle to try and make this make or break moment. There could be some resistance at 260, but ultimately I see it reverting back as high as 275 in the near term.
All right, Rick, so as we take a look at some of those levels here, 210 to the potential downside for a pivot, 260, 275 to the upside. What are the technicals showing us?
Right, 210 matches up right here with our recent low point that we established here. Also, there was kind of a consolidative area back here. Our green line here, I highlighted more specifically 217 because to me that looked like the high points, the subsequent low points, and about where we hit lows once more. So the same general areas, though, is what I'm trying to emphasize there. So now we can see that we've had a little bit of a bounce off of that area. We have broken out to the upside from our falling wedge type shape. And, really that 260 level, once again, very close. 257 to me was around where we had our best closes. That's about where we had our breakdown point as well. So that same general area, 260, is perhaps where you might be looking for resistance. There's not really a whole lot of clear signs of near-term resistance to look out for until we hit that point. So when we do look at some of our other studies here, our moving averages, purple 252-day exponential moving average, that one lines up pretty closely with where we saw prices bottom out recently here. The next moving average to be on the lookout for here, 21-day EMA comes in at 243 or so. Prices below our 2 shorter-term moving averages, they are trending downward here, so a close above those levels would be what the bulls will be looking for. RSI also improving somewhat. We are out of the oversold area. We've also broken above our downward sloping red trend line there, so a bit more positive developments as well. Today's candle, not the most encouraging, though. We are significantly off those opening highs that we saw here, but the day is still fairly young. So finally, when we look at our volume profile study here, we can see that we have a volume node right around here that lines up with our -1 standard deviation channel and our 250 2-day EMA. Volume really starts to drop off once you get too far below 210. It picks up again down here near about 189, 190. So that could be a downside area to be on the lookout for if that was your area of interest. But to the upside, on the road back up to that 260 level we mentioned, we topped out here near our volume profile point of control. That comes in near 233. So that would be another potential congestion area to work our way through. Things start to drop off once again in terms of trading activity above 250.
All right, so right now, ORCL trading at about 224, so kind of right in the middle of that range. Charles, let's move on to your next pick here. We're talking about Carvana. We saw them get a little boost yesterday after their CEO revealed their growth plan and their strategy going forward at a conference, saying he was comfortable with their predicted 40% growth rate. You know, are they ripe for a rebound here?
Yeah, and this is another one that's been kind of well defined at this 200-day simple moving average. Again, there's a lot of concerns about Carvana after CarMax's earnings and subsequent guidance. And, there's been a lot of chatter about, a high default rate with auto loans. But Carvana's really withstood a lot of this heavy duty pressure that we've been seeing in a lot of growth stocks. And this is where it kind of stands out to me that they've been a pretty decent performer, or at least holding up a lot better than a lot of other names. And this is where I'm looking at a technical support level at 325. If I see buyers, because this has been about the range where there's been some struggles, this 330, 325 level, where recently we've seen a lot of knockback in terms of pricing in Carvana. So if they're able to actually now utilize this as short-term support, this could be a great pivot zone. Now, I'm not expecting huge explosive growth out of this stock, but I do like the idea for a snappy little buy to the upside, targeting around 347 to 350 in the near term. There is a gap fill at 353 that also could be attractive to buyers as a upside target. I don't think this is going to race all the way back to 375, 390, unless this market gets into some sort of sustainable rally. But I do want to see how it's going to interact. I want to see the price action here at 325. If I see buyers step in and lift this price up, this could be a really buy low, sell high opportunity, low risk, pretty decent upside reward for the short-term trader.
All right, Rick, so a lot of levels mentioned there, potential support, moves to the upside. What levels are sticking out to you?
Just to start with 350, like we were talking about that general point, that was a low point before we had a gap down. That would be the next area of interest here once we get beyond those highs. That looks like about the 347 area too. So that would be the zone to watch out for. Never quite filled that gap. Also failed at breaking above our trend line so far today. The upper boundary of our two white lines here, our downward sloping channel type shape. But if we were to go back a little further and look at some older levels here, 285 stands out. That was about where we had our high close. That was about our breakout point. Another test of that old level. That's where we bottomed out once more. So that really stands out as a noteworthy downside level to watch. But above that as well, 305, our darker green line, roughly where we kept topping out. Bottomed out here, and then bottomed out multiple times more. And we did have one close below that, but even though we had that large green candle that was coincidentally the same place, 280, we touched on 285, the closing price managed to fight its way back up to that 305 level once again. So it's seeming like the support for now has held on. We can see that we did top out at our 63-day EMA as well, right here near 340 or so, just below 340. So that would be another area to watch out for. But we also held on at our 21-day EMA so far near 327. RSI improving very modestly, still not a convincing breakout above the 50 level that separates bullish from bearish momentum, but getting closer, continuing to make very slight new relative highs as well. Also still a modest uptrend in play corresponding with our much broader, longer-term downtrend here. So we'll see which one eventually wins out. That could be a further directional clue. When we do look at volume profile, the trading trading activity, we can see drops off below that 290 level or so. That's about where things really start to thin out. But if we were to look to the upside, our point of control, the heavy trading area, comes in around 340 to 350. So once again, this stands out as an important upside area. You can see the volume starts to drop off once you get above that level here. So that stands out once again.
Yeah, and right now trading just above that 325 level that Charles was highlighting. We're about 329, just under 329, about a penny under it right now. All right, your last pick, Western Digital, I just read a headline on. They got an upgrade, a price target increase from B of A, raising their price target up to, I think, $197, so implying about a 26% upside from where they currently are. Walk us through your outlook here.
Yeah, and this has been, silently one of the stronger names in this segment. We've seen some really parabolic movement in SanDisk, SNDK. Micron, of course, has been a really standout name, and along with Seagate, but nobody really talks much about Western Digital. Well, we've seen Seagate, Micron really exhibit some short-term weakness, a little bit more than what they have presented in the last month or so. SanDisk is absolutely getting smacked today. So, we're seeing a lot of risk-off trading in this segment, but WDC is on watch. I was initially watching this 158 price level, but really this 150 is going to be critical. If they can maintain this price level, I do love the rebound aspect right back towards 170. Again, this is another one of those trades where I'm just looking for a short-term floor, really aggressive buyers to step in and looking for a general, buy low, sell high opportunity in a strong performing name. And ultimately, this is a low risk, high reward in stock that's been a outlier in terms of performance this year. So this is really kind of getting at a critical point. Maybe this segment is going full risk off, just like we've seen a lot of other stocks related to AI segments. And this is going to be at a very critical point at this 150. If they lose this level, it could certainly break down as low as 130 in the near term. But if they happen to hold this level, this is going to be a great dip to buy into.
All right, Rick, so as we take a look at the chart, does it appear they've got a shot to hold this level?
Anything's possible. I mean, and I would say it is encouraging that for the bulls, at least, that we've held on at this level near 150. That's where we've seen repeated low points. We had another area of interest here, these old highs near about 137. That kind of stands out as well as where we saw our breakout point. But today's candle, not exactly the most positive for the bulls. We are off significantly from that opening high. We are on pace for a bearish engulfing candle where today's large red candle is swallowing up the previous days. You would need downside follow through in the next session, though, after the close. So just kind of a grain of salt to consider if you were planning anything, based on that idea. We can see also the 21-day EMA, our yellow line here, lines up very closely with those recent lows near 155. So again, additional emphasis on that area. Our best close, 174.22, is the upside mark that stands out first, the most obvious area to beat. We are on the verge of breaking through our very short-term green trend line here. Not even really a good trend line. I was just trying to connect the corresponding lows here, but we are making a new relative low below that point here. So look for a breakdown below that 50 midline here. Finally, when we can see our volume studies here, we are seeing a small accumulation of volume here around 155 or so. Not really too much else to work with until we get down here near 120. So in terms of volume, not terribly much help here. Often that's the case with stocks that are moving very fast, but we can see that our 150 area stands out once again. It's the site of our +1 standard deviation channel. So several technical factors converging in that same area here. Our +2 channel, upside boundary potentially 186.42 is a snapshot of right here in time for right now.
Yeah, and right now just slightly above that 150 level you highlighted at 151.46. But year to date, Western Digital up more than 240%. Charles, we want to thank you for being with us today for Big Three. That's Charles Moon from Prosper Trading Academy. And of course, Rick Ducat, our lead market technician here on Schwab Network. Thanks as always.